Alright, so in this tutorial I'm going to show you how to use Poloniex. Poloniex is one of the biggest altcoin exchanges around, and they also tend to determine price discovery for some of the top coin markets. So the first thing you're going to want to do is click on this tab to create an account. Put in your name, your country. You don't have to give your phone number. You could give your email address. Make sure that you're using an email address that's not public, just for extra security. Strong password. You want to make sure you use at least 16 characters with numbers, letters, capitals, and special symbols, things like that. And then you'll have to verify your email. They're going to send you a verification code, and you just click on it to verify your email. Alright, so once you're logged in, the very first thing you're going to want to do is set up two-factor authentication. This is extra security, so what you'll do is you'll download an app called Google Authenticator, and then you scan this QR code and it'll generate a special code for you that you'll have to confirm with your password and code to enable it. And what this does is it secures your account, so if someone cracks your password, they need to actually get physical access to your phone and get that secondary passcode that'll get generated. So let's look at trading and some of the trading options. So you have various different tabs here. You have exchange, margin trading, and lending. So under exchange, these are all just spot markets. So as you can see here, you can see all the different types of markets here. You have the coin, so this is the abbreviation of the specific market. So this would be Monero, Dash, Ethereum, Golem, Ripple. You have the price. The price is all measured in Bitcoin value, at least for this exchange here. You can get prices pegged to the US dollar using Tether, also known as USDT. But you definitely want to trade on markets that are the most liquid. So obviously there's some liquidity here for Bitcoin and such, but some of these other ones aren't as liquid. The majority of the most liquid markets where price discovery is determined are generally paired against the Bitcoin markets. So it'll show you the volume. This will show that Monero traded over 4,000 Bitcoins in trading volume, so several $1 million. It shows the price paired in Bitcoin. It'll show you the percentage change, 24-hour percentage change. And this isn't always accurate. I've seen times where it wasn't accurate, but for the most part, it'll just give you a quick overview and then the full name of it. So let's say I wanted to purchase a coin. Let's go with purchasing some Ethereum as an example. So we have the order book here. We have the buy orders. It shows the buy support. So there's over 1,000 Bitcoins in buy orders. So these are the bids and these are the asks. These are sell orders. This is the amount of Ethereum that people are trying to sell. And as you can see, the markets and the price are moving quickly. As I scroll down, it'll show the market depth between buys and sells. It'll show my open orders on the books. It'll show the trade history, so you can watch the order flow of trades being executed. And you can click on this for my trades. Now, I don't have any trades because this is just a demo account. But what I do have is I did deposit just a couple of dollars of Bitcoin just to show you how to execute a trade. So I'm just going to be doing a market trade. So I'll just pick a price down here, and it'll give me the best fill for the price. Now I can only trade what I have in my account, which is a couple of dollars. And that'll allow me to buy 0.16 of Ethereum or Ether. And it executes immediately. So that's a market order. I could do the opposite too. I could just set a sell order. So let's say I want to sell it for more expensive. Let's say I want to sell it for 15 instead of 12. then I can just put down the amount that I want to sell it for and how much I want to sell. And that'll just stack an order on the book for me. So as you can see here, my open orders, it shows the price I want to sell at, the amount, the total Bitcoin that I would get out of that trade. And if I want to cancel it, I just hit cancel. And so now you also have stop orders, right? So let's say I wanted to get stopped out of a trade. All right, so to set a stop, I put the stop price where it gets triggered. So if the market moves against me to 0.011, right? So if it drops, then it'll trigger my stop, but it'll set a limit, and this is for slippage. So if you have like a large order, you want to set a limit. It'll sell up to this price, and then it'll show amount. In this case, it's only a small amount, so it would likely execute immediately. But so that's the difference between just setting the stop where it triggers and the limit fill up to this price. So it's showing me if the highlight bid drops to or below 0.011, in order to sell 0.165 ETH at a price of 0.01 BTC will be placed, right? So that'll ensure that my order gets executed with the least amount of slippage, because sometimes if the market's moving fast and you have a big dump, your order might not get executed at all. So that's what that stop limit is for. So I'm just going to cancel this. And I'll show you how to transfer funds. So now that's exchange, and you could trade on the Ethereum markets, the Monero markets, and the USDT. But I like to just stick with the Bitcoin markets because they're the most liquid. So if I want to transfer balances between exchange and margin, for example, I just click on transfer balances. I just have to do agree. All right, so click on that, exchange to margin. Actually, let me do Ethereum since there's more. All right, from exchange to margin. And now I just go in the margin trading tab. And I have various different markets. Not every market that they have is available for margin trading. So what margin trading is being able to use my base as collateral to be able to borrow more coins, right? So I have up to 2.5x leverage, so I can borrow 2.5 times my deposit, right? And what that deposit does is ensures that the market cannot move past a certain percentage. If it moves against me by a certain percent, then I'll get liquidated and lose that deposit. And this ensures that the swap lenders, which are the people lending the coins, will always get their money back. As long as the exchange stays solvent, they don't have any risk on the line from traders taking risky trades. So I'm going to show you how to short Ethereum. So shorting is just borrowing Ether and being able to sell them on the market. And so if the market moves down against me, then I can buy back those Ether at a lower price. The swap lender gets back their principal with the interest, and I get to skim the profit in between where I sold and where I bought back in. So if I want to sell and go full size, I just click on that, and let's just pick a price that'll get me filled at, and then margin sell. Okay, so it's saying my collateral, I don't have enough collateral for that size. So let me reduce the size here a little bit. Sometimes you have to just kind of do this in increments. Even though it's telling me I have that much ETH, Sometimes you need to do it in increments. It won't allow you to execute it all at once. So let's just short sell 0.11 ETH. So as you can see here, it says I've sold this amount of ETH and the order was placed and executed. So it shows that I'm short, tells me the amount that I'm short, tells me the base price, the estimated liquidation price. So if the market moves up to 0.026, which is pretty far away, then I would lose everything in my account and get liquidated. It shows me my unrealized profits and loss. So I'm starting off at a negative by 954 Satoshis. And then it'll show the unrealized lending fees. And this is just, this is basically just the fees that I have to pay in interest for borrowing the coins. So now that I shorted, let's say I just want to set an order on the books to close me out once it hits a certain price. So let's say if it falls to 0.010, for example, I want to close out and take some profit. What I will do is I'll just set a buy order for the amount of ETH. So it would be 0.1105 2320, and I can just set a buy order. And so what that'll do is it creates like a one cancels the other, OCO. So as soon as the price hits that value, it'll close out my order and profit automatically. So I don't really have to pay attention. Now, I could set a stop as well. If I don't want the market to go against me, I can set a stop exactly the way I demonstrated before, right? And let's say I just wanted to close out quickly out of my trade. Then all I have to do is hit close right here. And it just closes me out. And that's that. So that's how you short an altcoin, and longing is just the opposite. You just buy. Now I'll show you one last thing with Ethereum, which is the swap lending. So again, I'll have to transfer balances, and so I'll go from margin to lending and then transfer. So if I look at the lending, I could see BTC lending. So people are lending Bitcoins. This is the rate. So they're offering loans for, this is daily interest. So they're offering loans at 0.0196%. So the compound interest, obviously that could add up. If you're okay with the counterparty risk, you could just do lending, which is less riskier, and just earn some passive income on your Bitcoins. And if I wanted to lend Ethereum, there aren't any loan demands on the table, so I would have to just make an offer and then set it up for the amount of days. And if I do auto renew, it'll just keep on renewing every 2 days. And I could put any amount of days that I want. Obviously, someone here's got 2 to 10 days. And then it puts my offer up. So if I wanted it to get lent out immediately, I would give a reasonable offer that surpasses everyone else's offer so that it gets scooped up a lot quicker. For the most part, sometimes if one of these markets are in high demand, like if they really rally and they're illiquid, sometimes the loan offer can go up quite significantly if people want to short it and there's not a lot of demand. So you can actually, if you see one of these markets pumping, then you can buy some coins and then lend them out so that people can short. But obviously there's some risk, because if the markets crash on you, then you can lose money. And that's why the percentages are much higher when people want to borrow and the markets go parabolic. For the most part, the most stable way of doing this is just through Bitcoin. And you can go here. So now that you know the three elements of this exchange, you can look at deposits and withdrawals. So this will show you everything you have, and you can basically, deposit any coin you want. So if you wanted to deposit BitShares, for example, it'll generate a code. If I want to withdraw, then, same thing. I have to put in the address. In this case, there's a memo that comes with the address, the amount, withdrawal. Then it'll send you a verification email and also ask for your two-factor authentication. And that's important. You want to make sure that you do that. And then you can also look at your history. So it shows the deposit withdrawal history. I can look at trade history and analysis. So it'll just show me all the trades that I just took. And it'll show you all your trades. So if you need to calculate, you can look at it by dates and you can add your coin and such. So if I were to look at Ethereum and analyze, it's showing that I have a loss of 0.0019, which I actually don't think is very accurate because that's all I have in my account. So yeah, I'm not sure if their trade history section is quite accurate at calculating this, but you'll have all your raw history right here. So that's it for this Poloniex tutorial, and I'll see you in the next video.